Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Friday, there will be highly important economic headers to be released from China. From the United States, there are no important economic headers to be released, but we will be watching for the following FOMC members' speeches: Bowman and Evan and George and Kaplan and Clarida and Kashkari. That's all. We'll move on now to the numbers. On the last trading session of Thursday, we have had a trading range from 1483 to 1497. Numbers are rounded and the market is still opened. Gold spot is expected to print a close price above 1492. The numbers rounded and the market is still opened. Gold is trading in a bullish trend above its all daily simple moving averages, except the 20 days and the 50 days daily simple moving averages, and the momentum is seen strengthening. For the RSI readings, it's moderate on all the charts: 61 weekly, 66 monthly, and 48 daily. And for the supports are 1483 followed by 1477 and then 1459, and for the resistance is 1497, then 1500 and then 1510. That's all for the numbers. We'll move on now to the trading strategy. Hi again. Finally, a Brexit deal has been achieved and gold benefited of a weaker US dollar as the US dollar lost ground for both euro and pound, which moved higher after and within the announcement of the brand new Brexit deal. Now, speaking of the brand new Brexit deal, we've just finished the easiest part maybe. Now the UK Parliament approval is needed amid the rising opposition for the terms of the deal being sealed upon, which I believe it's going to be good and helpful and supportive for gold in the coming weeks. On the other hand, tension is still there between US and Turkey, though of the truce, and the United States and China trade deal phase 1 is not going through as expected. Somehow the environment could be helpful and supportive for higher prices in both gold and silver. And for the technicalities, gold is trading in a bullet trend above its all daily simple moving averages, except the 20 days and the 50 days daily simple moving average, and there is a bull flag on the weekly chart, as I've been saying in all the videos this week. And gold is stuck in a wedge, which we earlier this week tested the lower band of it, about 1477, and if things continue favoring gold, we got to test the upper band of this wedge, about the 1512. I favor gold price actually to rise than to tank, especially that we are heading to the FOMC meeting in 10 days, which suggests that gold should nearby its fair value, about 1520. Again, the market has its own mind and mood, and no one with a given market and economical conditions that we do have right now could know where gold is heading exactly. It's a point of view, and if I'm playing my money against the market, I'll be on the buy side. I don't want to be cold smart or smarter than others and short gold within the given exceptional geopolitical unrest and the harsh economy that we do have these days. Bottom line, keep our favorite strategy in play, buy the dip and look for an exit within $5 to $8 from your entry price. Also, you can short the rallies, but be aware of gold exceeded 1512 and moved above that price level. This could bring 1540 and 1560 back into the play again. That's it for today. Thank you guys for watching. I'll be seeing you next week in another video. I wish you a very successful trading tomorrow.